Vietnam. This is not a test. This is rock and roll. Time to rock from the Delta to the DMZ. That's right. You are live on the Phoenix National Network with me, your host, Richard Ciuzio with Hudson United Mortgage. And I am here to talk to you today about points and what are they good for? Just like Queen says, absolutely nothing. Whoa, sing it again. No, I'm just kidding. Anyway, listen, I think I got that wrong. Anyway, a little bit about me. I have been in the mortgage industry for going on 3 years now, and I absolutely love it. I am a loan officer with Hudson United Mortgage. I'm licensed in New York, New Jersey, Connecticut, and Florida. And if you know anybody or yourself that is wanting to get a pre-approval, get a second look at a pre-approval, first-time home buyers, do a refinance, maybe save some money or lower your rate and term, I'm certainly available to help you out with that. You can reach me at area code 321-634-2552. That's my cell phone. Shoot me an email, courtesy email, richard.cusio@hudsonunited.com. So I'm going to jump right into it today. And let's talk about our discount points. There are a lot of misconceptions in the mortgage world when it comes to points. People hear the word point and they automatically get scared. Points may not be for everybody, but they certainly are for some people, and I would say most. And I'm going to tell you why. What are points? First off, mortgage banks are going to quote you a mortgage interest rate with the lower option to pay money up front in the form of points. It's for a fixed lower interest rate on the life of your loan. I always offer my clients a no points product. That's just who I am. I always do a baseline. Then I get the question, oh, well, that's the interest rate. I'm like, well, that's your current market rate as of today. Can we go lower? Yeah, let's absolutely go lower. Let's buy an eighth of a point. Let's buy a quarter of a point. In order to be competitive, we have to do that sometimes. So what is a point? A point on a mortgage means precisely or approximately 1% of the loan principal amount. So if you plan on taking out a $200,000 mortgage, for example, and you pay a point up front, you're going to pay approximately $2,000 additional at the mortgage closing as added onto your closing cost at the time that you take out your loan at the closing table. Now, the effect of paying this 1 point on a 30-year mortgage or $2,000 could also be in the order of, maybe a quarter of a point, an eighth of a point, a half of a point, up to 1%. But it could ultimately lower your 30-year mortgage rate from 4.75% to 4.5%. What does that do for you? Well, one, it's probably going to save you about anywhere between it depends on the size of your loan, but for this particular scenario, it'll probably save you about $25 a month. And if you put down a low payment, it'll help offset the cost of your PMI. And when I say low payment, I mean low down payment. I mean anything under 20%. But in this case, approximately $25 a month in your monthly savings. This is similar to the effect of points on a 15-year mortgage, except that with the 30-year mortgage, the points provide more time for monthly savings through your lowered interest rate. You have a lower rate in term or a longer rate in term. There, theoretically, your mortgage payment is lower. If you have a lower rate in term, you're eliminating interest, but your mortgage payment is going to be higher. So with the lower rate in term, you're going to notice that difference in the interest savings, 15-year compared to 30. The mathematical equation calculation, it usually scares people away. And my goal here today is to not scare you away from the word point, but to educate you on how it can help you out in a lot of scenarios and how it's helped me in the past few years that I've been doing this as a mortgage broker. Before I move on, folks, if you have any questions, feel free to throw them in the chat or Facebook or YouTube. We have a moderator. So if you need anything, if you have anything that you want answered specifically, I'll do a Q&A at the end, or we can do it during the segment as well. So feel free to post on the social media platforms or on the apps. Moving forward, Like I said, I do always offer my clients a no points product, and together we can decide if it's worth buying a discount point or not at all. If it's got a great rate, there's no point. But if you want to go lower, if you have a high balance loan or doing a refinance or whatever the case may be, I've come to learn in this business that when buying a home, there are some people out there um, that all they care about is interest rate. And in order to be competitive, we have to buy that quarter point, that eighth of a point. It's not always about the customer service or the experience you have. Sometimes all clients care about is their interest rate and their monthly savings. We're talking nickels and dimes here, on an eighth of a point or whatever it may be. Have I lost deals because of an eighth of a point? Yeah, I have. I'm not going to lie to you. Um, and these are big kahunas too, $600,000-$700,000 loans for an eighth percentage. But that eighth percentage on a $700,000 loan is thousands of dollars over the life of your loan and the savings that you can accumulate. So I understand it sucks and it hurts, but I still understand. Um, but the options are out there to buy a point, quarter point, eighth point, whatever it may be, and lower these monthly costs, save you money. I want to do the best that I can for you, and I promise that's what I do for all my clients. Now, most lenders also offer the option to receive points. So there's an upside to this. You don't always have to pay a point to get a lower interest rate. Maybe you can receive a lender credit. We call this a lender credit, where you take, maybe you just keep the at par no point product, or maybe you go like an eighth above what the par interest rate is. So if your par interest rate is 3%, and you're at zero, and that's a 0 point product, and you go to like 3 1/8 on your percentage, you can get a lender credit back. Maybe you need help with closing costs. Maybe you're a couple thousand short or 1,500 short or whatever it may be. These lenders offer different credits for the pricing of that particular loan for that particular day. I've seen lender credits and on loans that I've done up to $2,500. Obviously, you don't want to go too high on your interest rate. You're going to kill yourself over the years. But in order to help with a couple grand in closing costs, some of these lenders do offer lender credits as well. So there is an upside. Um, it's Another benefit for these mortgage points is the tax deductibility on the bona fide points. All right. An additional factor about paying these mortgage points is that they are tax deductible as long as you claim them in the year that you sign the loan. They're considered prepaid interest, which allows you to itemize them on your income taxes. All right. So you're going to get that money back one way or the other, which is great. And you're going to get that money back in the savings of the interest and your monthly payment on your loan. For more details, though, I would consult your CPA or tax specialist, because I'm not the tax guru. I'm just a mortgage guy. But why else would we need to consider buying a point or a half a point or any type of point? Maybe your debt to income ratio is too high and you don't qualify for the loan because of it. A lot of people don't realize that option is out there. What is DTI? DTI is your debt to income ratio, and there are two types of ratios. There's your front end expense and your back end expense ratio. Your front end expense ratio is your proposed monthly housing expenses, aka your proposed principal, interest, taxes, and insurance. Your PITI, 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 principal, interest, taxes, and insurance, monthly. How do we arrive to that number? All right, quick, simple calculation. We take your monthly income and we divide it by your monthly housing. So if you make $1,000 a month and your housing expenses are $2,000 a month, you're at a 50% ratio on the front end. Got to lower your housing expenses. Got to buy a point. Got to find a cheaper house, whatever it may be. We got to get under. We on a conventional loan, we like to stay under 46. However, FICO score comes into play, and I've seen as high as 49 on the front end. But it's not always the case. It will depend on your liabilities and your FICO score. These are huge factors when they come into play. But generally, I like to keep it under 46. And If you're right on the cusp, maybe you're at like 47 and you have a low FICO score. All right, cool. Let's buy a point. Let's get that interest rate down. And that's where it's going to come into play. Your back end expense ratio is the same. It's your proposed principal, interest, taxes, and insurance on your future home that you're applying for, plus any other installment and revolving debt that you have: credit cards, car loans, student loans, medical bills, et cetera, that pop up on your credit report. If your ratio exceeds the maximum allowed DTI on the front end or the back end, depending on your credit score, then it would definitely be time to consider buying a point, eighth of a point, quarter of a point, half a point, full point, depending on your situation. If you really want the house, it's going to be worth it. And plus, like I said, the interest and the payment, the monthly payments, that the savings that you're going to incur over the life of your loan is going to be gargantuan. I always like that word, gargantuan. It's very rare that I ever get to use it in a sentence. So on conventional loans, your back end DTI cannot exceed 50%. On an FHA, which is a government loan, 56%, depending on your FICO score. Anything below 680, the rules kind of change because of COVID overlays. However, 680 or above, those are your ratios. 50 on the back end for conventional and 56 for FHA. If you're at a 51, 51.2, 50.7, time to buy that eighth or a quarter point. Let's get that to 49.99 if we have to, and make the loan work. And we can do that, and we have done that, and will continue to do that all day, every day. So those are some of the benefits for buying points. It's to help qualify. It's to help save you money and everything else. So listen, I want to put on I have a presentation here. I want to put on the share screen. Give me 1 second. And basic. All right, where can I go? Screen 2. Can I share this? You guys see this? Oscar, Phil? You guys see my?
Yes, sir.
Okay. All right. So this is the scenario that I'm going to do an example with. $650,000 purchase. This is actually for a client that I'm working with now. I gave him a pre-approval a couple of days ago. He wants to put 5% down, which is a 95% loan to value, which makes his loan amount $617,000. Now I've done a few different scenarios here.
Wrong window.
One. This one. Hold on.
Yeah.
I apologize. Nope. Which screen do you see?
I just see one of the windows. You got to select your PowerPoint.
Oh. Hold on. Yeah. Let me try this again. Here we go. Is that better?
Yep.
Okay, perfect. Sorry about that, folks. All right, so we have a $650,000 purchase, 95% loan to value with a 5% down payment makes his loan amount $617,000. Here are a few different scenarios for the pricing, and I'll go into this with my PowerPoint in just a second as well. So this was an at par rate that I calculated yesterday for this particular, and when I say at par, I mean a 0 points product, which is about 100. And I'll explain that when I show you the PowerPoint presentation and how I look up interest rates. But for this particular product, 30 years at a 3% rate, the total interest over the life of his loan for that 30 years of loan amount of 617 at 3%, he's paying $319,467. Add that to 617, you're up to over $900,000 that you're paying for your mortgage. All right. So, and this was a credit this year. He's getting $290 back from the lender at closing. So theoretically, $290 are going to come off his closing costs because this is an at par product. If he went to 3 1/8, he'd probably get maybe like 800 or 1,000, 3 1/4, a little bit more, so on and so forth. This is his principal and interest payment, 22603, just principal and interest. That doesn't include your taxes or insurance. So for no cost, 3%, $319,000 of interest over the life of your loan. All right. The next rate down was 2.99. Not much of a difference, but there is. It's like $1,200 for a cost of $266. There's a little negative here, $266. Principal and interest, it's only a $3 savings. Is that worth it to me? I mean, if I don't mind $200, yeah. But look, you're only saving just under 1,200 over the life of your loan. That's the difference between 0.01% of the same scenario for the interest rate. $1,200 is what you're going to save over the 30 years. But you're plus $3 a month. So, but then we come down to 2.875. Now, I hate to say rule of thumb, but my rule of thumb is if you can recoup the money that they're spending on these discount points, in less than 5 years, then I totally think it is worth buying the point. Absolutely 100%. You're going to make your money back. I've seen people make their money back in, going from a 4 3/4 rate to a 2 3/4 rate. They've made it back in 6 months, 8 months, 11 months, 2 months. Some of these savings are, once again, gargantuan, but I like to just follow that guideline. If you can do it in 5 years or less, it's absolutely worth it. That's your recoup period. So this one is a 30-year scenario at 2 5/8, 2 7/8. I'm sorry, and 2.875. Your interest, $304,559. That's almost $15,000 less over the life of your loan between the 3% and going down 1/8%. You're also saving an additional $41 a month. And it costs you $2,500. I did the math. You can recoup this in 5.6 years, this scenario here, and you're saving $15,000 plus $41 a month. That would be key for me. But if you really want to go down, let's check out the 2 3/4 rate. $289,788 over 30 years at 2.75, $29,681 in interest. That's a car for a lot of people when you put it like that. That is a car. That's my car. My car costs 20. It's more than my car. So I'm getting, if I were to do that, I'd have $1,000 left over for the price of my car. Plus, I'm saving $82 a month. Yeah, it costs a little bit more at closing, and the recoup period is a little bit longer. But look, on those big homes, 6, 7, 800,000, $900,000. I mean, obviously, people buying those kinds of homes, they have the money, so to me, sometimes it's a no-brainer to buy the point, lower your rate, and save money, plain and simple. So now I want to move on to my PowerPoint, and I'm going to disappear for a second. Whoa. Pay no attention to the man behind the curtain. And I should. All right. Can you guys see my background here? Nope.
Yep. Yes, sir.
You can.
Yes, sir.
The PowerPoint one?
Yes, sir.
Thank you. All right, guys. So here's my information again, my NMLS number, where I'm licensed, how to reach me. Are they beneficial to your mortgage health? This was the scenario that I popped up. Okay, this was it. He had with this scenario, he also had a 721 FICO. Is that gold standard credit? No, it's not. 740, 760, that's gold credit standard. in the mortgage industry, I would say anything above 740. Doesn't matter if you have 840 or 740, you're probably going to get the same benefits. However, that 20-point difference or 19 points between 721 and 740, he might have been able to get a little bit better pricing on the scenario that I just talked about. It's a conventional loan, standard, 30 years, 650,000, 95% loan to value, which means he's putting 5% down payment or offering 5% down. It's a primary residence. It's a single family, 1 unit, primary residence. It's detached in Mamaroneck. I think that's Mamaroneck, 10523. I think it's right next to Oscar, if I'm not mistaken. It's where he lives. So right next door, people, I'm doing a house for him. 30-day lock period. This is the scenario that I'm using to get these results. Here are the rates. These are the interest rates that are offered on the side. 2 1/8, all the way up to 4.5%. I'm not giving out the lender's information, but as you can see, we can do lock periods of 15, 30, 45, 60, 75, and 90-day periods. Do the loans take that long? I've seen loans take 90 days, but it's not like on a purchase or a regular refi. Maybe it's because they're doing a refi on a co-op or they're doing a renovation loan, or there's excruciating circumstances. Normally, we can close loans within 30 to 45 days, sometimes a lot quicker. So here, if you look here, is your 3% at par rate. And this is your annual percentage rate. They always have to list that. But this is the pricing scenario, okay? When I said at par, it's as close to 100.000 as possible. It's actually 47 hundredths above 100. And there it is right there, 0.047%, cost of 290. Green means credit from the lender back towards you, towards closing costs. Red means a cost that you would have to pay on top of all your other closing costs to get this rate. So at 2.99, like I said, he had to pay 266 bucks. For the 2.875, he had to pay the 25, and so on and so forth. So you have a 0.043% of a point. You have a 4/10 of a point, a little over a point. Remember, the 1 point is approximately 1% of your loan amount. So this is almost 1.2%. Yeah, 617. It should be a little less, but it's 1.2. So now, in addition, or in retrospect, let's go. What if he wanted a 3.25? Look at this, 3.25%. He's getting almost a point back from almost a credit. Sorry, guys. Almost a credit of a point from the lender, $6,113. That's going to go towards his closing costs. So these are the benefits of paying the point or not paying the point. Sometimes people need a little help. These are the pricing scenarios that I work with on a daily basis, and these change from day to day. So do I think it's beneficial to buy a point every now and then? Yeah. When I'm seeing a $2,600 payment drop to, $2,500, and saving $81 a month plus $30,000 in your interest, absolutely. And now, if you did a 15-year loan, I did a refi for a woman the other day. We bought down her interest rate. The at par rate was 2.375%. No, I'm sorry. At par rate was 2.5. We bought it down by we bought it down an eighth to 2.375. She had very good credit, and the loan amount was like 200,000. She was paying over 4%, and she was only, I don't know, she was 9 years in on her loan, 8 years in on her loan. I reduced her loan life by 7 years, and by doing a 15-year loan. So I took 7 years off her loan, and I'm saving her $90,000 in interest over those 15 years by erasing and getting rid of that um, that years and lowering her interest rate. $90,000. That's college tuition. Forget the car. If you have kids, that's your kids' college tuition. So these are the benefits that I want to point out to everybody on why it's important, why it's not important, why points are misconstrued in the market. These are the things that you could be saving. And, look, money's everything. It's not everything, but it helps, I should say. And then I also want to point out that when I do my um, scenarios for clients, whether it's a purchase or a refinance, these are the worksheets. Gracious of Mr. Chris Conlon, I appreciate it, although I have tweaked it a little bit and added some of my own um, sections to his worksheet. This is a breakdown of everything that is included, or it's a good guideline and baseline to go by for a almost, I would say, a very accurate tool for calculating what you're going to need for your closing costs and what to expect down the road. But it also outlines your monthly principal, interest, taxes, insurance, your PITI. So as you can see I did a 30-year cash out, and he's got the 5% down payment, 650,000 loan amount, 617,500. So with taxes and insurance, this guy over here who's not paying any points is paying 3703 and 40 cents. This guy over here for an eighth less is paying 3661. So about the $41 difference. In the gray section, these are your estimated fees for there's your discount point there. See, it's a 0, so that's a no point. This one here is just under half a point at the 2,500. Attorney fees, application fees. None of these fees are Hudson United fees. These are all fees to expect from the lenders, from the bank attorney, from your title, from your appraisal, from your credit report, from New York State, if you're in New York State, because New York State has mortgage tax. However, Connecticut and New Jersey do not, and neither does Florida. So you'll be saving some money there. But then the yellow section, these are, 1 year paid insurance, because you'll need insurance paid up front when you're buying a home or refinancing. And your escrow, your property taxes. Does this vary? Yeah, not everybody pays $1,000 a month in property taxes. Some people pay less, some people pay more, especially in New York. But I wanted to I wanted to bring you down here to this section. These are the sections that I've added. Cash at closing. I didn't really calculate that because this is just a scenario. But here I added in your total monthly savings. Here I illustrated at $41. Your time to recoup, which doesn't really happen because you're buying a home, so there is no recoup period except for your point. 5 years. Look, 5 years to get that money back. The difference and how we calculate that, you take the difference of the no point product of 3703 and you subtract it from the difference of your 2.875 half point product. It's $41. You divide 41, or the 2532 by $41, you get 5.1 years for the monthly savings. So yes, I think it is totally worth it. And then I got down here, total interest over the savings of your loan, $14,908. So this is what I do to help my clients get educated and prepare, and just what to expect down the line when it comes to closing costs, refinancing, buying a home. I want to make sure that everybody is as educated as possible, and to share the tools that I have become blessed with, so you guys aren't blindsided um, down the road. Um, so I'm going to open it up. If you guys have any questions, please let me know. I'm going to stop sharing my screen and I'm going to magically reappear here.
Well, that was excellent. Um, I think I have a lot of questions, just primarily because there was quite a bit of lingo that I didn't even know came into like just the whole concept of getting a mortgage, right? And I know you've done some work with Oscar,
I have.
and he's very happy with what you did for him because he can't stop talking about it.
So Oscar actually, to put him on the spot, I know he's hanging on the phone right now. But Oscar, Oscar was a particular. He was a special case. And I don't mean because of his financial situation or because of his FICO score or anything like that. Oscar got in right at like the time the pandemic was starting and the market was changing. So the rates had not hit that bottom level. They didn't bottom out like they did in August, September, October of last year.
Right.
He
Hmm.
had refinanced before that, and the rates weren't there. So, in order to make it beneficial for him, I think we bought it down from 3 3/8 or 3 1/4, and I got him before the rates really dropped. I got him. I want to say I think I got him 2.99%, and because of that, he's saving $400 a month and interest over the life of his loan as well. But you know, he's just taking that additional 400 and um, putting it right back towards his principal payment. So he's knocking out that equity. He's getting equity by putting $400 extra towards his principal only payment.
I mean, who doesn't want to save $400 a month?
Some people don't.
That
I do.
for the people who don't, you can save it and then give it to me, and then we could actually go from there, right?
All right.
But I mean, you. So it's not what I see with what you're talking about is that it's not really a black and white situation. If
Mm-mm.
somebody's really thinking about getting a house, they really should come to you and ask questions.
Yeah, absolutely. Listen, is it worth buying a point? Hey, man, if you can get a 2.875 no point product from me, I wouldn't even recommend a point to you. That's a great rate. That is a phenomenal rate, especially in today because we're almost back to where we started before the pandemic. Rates are still low. However, I mean, look, here's plain and simple. If I'm buying a $600,000 home and I can buy a half a point to lower a quarter percentage or a half percent or whatever it may be, then so be it. I'm doing it. I mean, you've seen the
So,
math.
are you saying that the rates are already moving towards normalcy?
No, no, no. I'm just mean we're not at the low twos like we were 6 months ago. We're
Mhm.
probably back to where we started pre-pandemic, like where we into
Okay.
February, beginning of March back last year. Do I think there's going to be a spike? I don't have that crystal ball. Summer's coming around.
Mhm.
People are going to be off. People are going to be home buying. People are going to be shopping. So I don't know what the market's going to do. But right now we're staying steady.
I keep hearing people still waiting for that, foreclosure, you know, uh, big foreclosure move. Is that something to be thinking about right now?
I do not recommend going after a foreclosure. That's just my experience, or from what I've heard. I haven't had to deal with that yet. And if you're a buyer who has just foreclosed, you have to wait 4 years before you can do a loan.
Wow.
2 years out of a bankruptcy, 4 years out of a foreclosure. And you have to do FHA if you're going 2 years on the bankruptcy, depending on what chapter you file. But we would need the bankruptcy discharge papers to do that.
What about first-time home buyers? Is there anything that a first-time home buyer should be considering? Let's say you're just starting a family, you've been renting most of your life, you don't have a clue.
Yes, start saving money. start getting your credit in order. Make sure you've got 680 or higher. Um,
Which we have a guy for that.
which we do have a guy for that, and he'll probably be starting his segments next month, I would assume.
Yes. Mhm.
Okay, great. And Eric Sturkin, great guy, better qualified. That's his business. But I would start saving your money. I would avoid opening any new lines of credit. I would avoid closing any existing lines of credit. If you don't have any credit, great. Or if you have no debt, I should say, not any credit. No debt, that's great. Um, keep any credit cards that you have under that 30% threshold, because anything above that 30% credit limit will lower your score. And I would obviously, you want to know what you get pre-approved. Come see a guy like me. Come see me. I have a free consultation. I don't charge any fees up front. My services are free. I want to see the loan close as much as you do. Um, and everybody wins. Um, you need to get pre-approved. You have to see what you qualify for. You have to see what your credit score is. You want to make sure you have enough assets. I have the resources to put you in touch with realtors if you need them, attorneys if you need them, um, home inspectors. You're going to need a home inspector because you don't want to
Guaranteed.
buy, yeah, potentially buy a home that has leaky pipes and cracked walls and
Mhm.
no insulation, and or a hole in the roof. So you're going to need the home inspector. They're going to do a walkthrough with you. I know a guy, he does free thermal infrared imaging with every inspection for his clients. This is like state of the art stuff. I never knew that existed. I'm like, this is great. I'm going to have him on the show next month. um,
Okay.
if I have home restoration people to put you in, maybe the inspection turned up mold or asbestos, lead paint from 1942 or something like that. These are things. You might want to do a radon test, termite inspection. VA is big on termite inspection. These are things to consider. So you know having your assets in line, um, and a strong pre-approval from a verified source to give to your realtor to make bids on homes. These are the things you're going to need to essentially find a home of your own.
Wow. Thank you so much, Ricky.
Hey, my pleasure.
That's some really awesome information that you're sharing today. I'm sure there's some people that have questions. You have questions for Ricky. You can download the app, Phoenix National Network. That is Phoenix National Network. You just go to any app store and download it. You could get information there from him. His phone number is right there in the banner below. So you can give him a call if you have questions. There's nothing wrong with asking questions. And also, you can get the information you need because this is very individual, specialized, right? Each person is different when it comes to your evaluation. Am I right?
Say that again, Phil. I'm sorry.
So I mean, each person is different. Each evaluation is different in every consultation.
Every client is different. Every loan is different. Every home is different. Um, not everybody's going to have the same FICO score. Not everybody's going to have the same um, uh, maybe there'll be clients that are asset and FICO score handicapped. There'll be clients that have great assets and great FICO scores. Maybe there's going to be people who the biggest thing is a lot of people were displaced for COVID and they haven't been working and they don't
Mm,
know if they can qualify or not. So these are the things that I can help talk to these folks about and answer these questions. Do you qualify? Okay, right now you don't qualify. Here's what we have to do. Let's put you on
mm,
a road to success. Let's put you on a road. These are what you need to do. You accomplish these things in this amount of time. Come back and see me in 3 months, 6 months, 12 months. I'm working with clients now. They're like, hey, Rick, we did exactly what you said. They came back a year later. Boom. Now I have 2 years of employment. They paid off some debt. I gave them a pre-approval. They're shopping in Connecticut. 12 months. Did it? It took a while, but they did it. They did. They took my advice, and I got them the pre-approval, and they're currently shopping. Nice people too.
Wow, that's awesome. That's awesome. Well, you've heard it here, folks, and we are really happy to have Ricky on our team, Richard Ciuzio. Really appreciate you, Rick, and
No problem.
everyone. Give him a call. Give him a call today. Download the app, and this way you can have a one-on-one conversation with him as well on the app as well. So, talk to you soon. Next, we have coming up will be Karen Mayo, and you'll be able to see what she has to say about mindful eating. Get her book on Amazon. Her book is available on Amazon as well. It's called Mindful Eating by Karen Mayo, and you'll be able to see some of the great things that she has to offer there.
She does
All right,
offer good
everyone.
stuff. Award winning,
Award winning, absolutely.
world renowned author. Forget that.
Hear that, Karen? We're promoting you. Yeah, so we'll see her coming up next. All right, take care, everybody. Bye-bye.
Thank you, everybody.